All right, let's dive into the sometimes intimidating world of investing. We're unpacking Toby Newbatt's YouTube video, How to Build an Investing Portfolio for Beginners in 2024. Hopefully we can all come out the other side with a clearer picture of, well, how to build a killer portfolio.
Yeah, it's a great video for sure. Toby really breaks down what can often be a really intimidating subject. So yeah, good choice.
Okay, cool. So let's just start with the fundamentals. When we talk about an investment portfolio, what are we even talking about?
Well, I mean, in the simplest terms, it's just a collection of assets that you own, with the hope that over time, those assets will increase in value. It can include things like stocks and bonds, real estate, even things like cryptocurrency or gold. The real art of it comes in figuring out how to mix and match all those different types of assets, though, to find, that sweet spot between risk and reward.
Yeah, it's like building your dream team, but for your money. I really like how Toby uses that heat map to show the market volatility over the last 10 years. It really brings home the point that you can't just look at one year in isolation.
Yeah, it's such a powerful visual. When you see how different asset classes performed in specific years, like 2018 and 2019, you can really see how chasing short-term gains can actually lead to some pretty big losses. But then he zooms out and shows you this chart that spans like 2 centuries. And what becomes crystal clear is that over the long haul, stocks have generally outperformed any other asset class.
Okay, so that makes a really strong case for having stocks in your portfolio. But what about those what-if scenarios? What if you just pick the wrong stocks? What if the market takes a nosedive? Toby uses a really interesting analogy about Nokia and BlackBerry to kind of illustrate this point.
Right, exactly. He uses that example to show how even companies that seem totally dominant can practically disappear overnight.
Mhm.
Remember just a few years ago when Nokia and BlackBerry were the HE names in mobile phones?
Oh, yeah.
Then the iPhone enters the scene and, well, we all know what happened next.
Yeah, it really drives home the point that we can't predict the future. So how do we protect ourselves from these kinds of unexpected shifts in the market?
Well, with diversification, you're not putting all your eggs in one basket. You're spreading your risk across different asset classes so that if one company or even an entire sector underperforms, it won't cripple your entire portfolio.
So how do we achieve this magical diversification? In the video, Toby points to index funds as a really effective way to diversify.
They're an incredibly powerful tool, especially for beginners. So instead of trying to pick individual stocks, which can be incredibly time-consuming and risky, you're essentially buying a tiny piece of hundreds or even thousands of companies all at once.
Wow. So with an index fund, you're basically just tracking a specific market, like the S&P 500 or the FTSE 100, and as those markets move, your investment moves with them.
Exactly. And the beauty of it is that these funds are constantly adjusting their holdings as companies grow or shrink. So you don't have to worry about constantly rebalancing your portfolio. Plus, the fees are typically much lower than what you would pay for a traditional actively managed fund.
Okay, so index funds sound like a great way to build a diversified portfolio. But what about bonds? I always thought of them as being more on the safe and stable side of things.
Yeah, you're right. Bonds tend to be less volatile than stocks. They generally offer a fixed rate of return over a set period, which can be attractive to investors who are looking for a bit more predictability, I guess you could say. Toby uses the example of UK government bonds, or gilts, which are currently offering a 4.6% annual return.
Okay, that's not bad,
Yeah.
but it does seem a bit low compared to what you could potentially earn in the stock market over the long term.
That's true. You're absolutely right. But bonds play a really crucial role in portfolio balance. They act as a sort of shock absorber during stock market downturns. A classic portfolio construction is the 60-40 portfolio. 60% stocks, 40% bonds. It's designed to find that balance between growth potential and stability.
So is that the magic formula then? 60-40 stocks and bonds and you're all set.
Well, not quite. Remember, there's no one-size-fits-all approach to investing. The ideal asset allocation will depend on a bunch of factors, like your age, your risk tolerance, and your financial goals. Someone who's nearing retirement might opt for a higher percentage of bonds, right, for that added stability, while someone younger with a longer time horizon might be more comfortable with a higher allocation to stocks for the potential for greater growth.
That makes sense. So we've talked about stocks, we talked about bonds, and we've touched on the idea of diversification. But what about all these other assets that people are always talking about, like gold, real estate, and cryptocurrency? Do they belong in a portfolio too?
Yeah, that's a question that comes up a lot, and Toby has a really interesting take on it. He suggests that for most people, a globally diversified index fund, already provides exposure to those asset classes through the companies it holds.
Oh, so you're saying that if my index fund is tracking, let's say, the S&P 500, it might already include companies that are involved in real estate
Mhm.
or mining, energy, and so on.
Exactly. It's like you're getting a taste of those different sectors without having to directly invest in them yourself. But there's a crucial caveat here, and this is one that Toby really emphasizes throughout the video. The most important factor is building a portfolio that you can actually stick with, even if it means deviating a bit from traditional advice.
So you're saying it's more important to find a strategy that you're comfortable with
Yeah.
and that you can actually maintain over the long term
Mm.
than it is to just follow some rigid formula.
Absolutely. And he's really transparent about his own personal portfolio. He's got a majority of it in index funds. But he also allocates portions to individual stocks, private equity, and even a small amount of Bitcoin.
Whoa, Bitcoin.
Yeah.
I thought he was all about that index fund life.
Well, he is, but he also recognizes that there's room for personalization, right? He's found a balance that works for him, a balance that allows him to, participate in the excitement of individual stock picking while still maintaining that solid foundation of diversification.
So it's not about blindly following someone else's rules. It's about understanding the principles of building a strong portfolio and then tailoring them to your own circumstances and even your own interests.
Exactly. And that brings us to a really important point that Toby makes toward the end of his video, the importance of utilizing tax-advantaged accounts. Like here in the UK, that would be ISAs and pensions.
Right, those can make a huge difference in the long run. It's like getting a bonus from the government just for being responsible with your money.
Exactly. So before you even think about what specific assets you want to buy, it's crucial to understand how to hold those assets in the most tax-efficient way possible.
Okay, so we've covered a lot of ground here. We've talked about what an investment portfolio is, why diversification is so important, and how index funds can help us achieve that. We've also touched on the role of bonds and even explored some of the less conventional asset classes. What are some key takeaways for our listeners as we move into the second part of our deep dive?
I think the most important thing is to remember that building an investment portfolio doesn't have to be overwhelming. You don't need to become a financial expert overnight, right? Just start with the basics, like diversification and index funds, and then gradually build from there.
Yeah, don't be afraid to personalize your approach either. Your portfolio should be a reflection of your own individual goals and circumstances. There's no one-size-fits-all solution. But there's definitely a solution out there for you. And that's what we're here to help you discover. So stick with us. And in the next part of our deep dive, we'll explore even more strategies and considerations for building a portfolio that's perfectly tailored to you.
One thing that really struck me watching Toby's video was how much he emphasizes the psychological aspect of investing.
Oh yeah, for sure. That's so true. Like, we can have the perfect plan on paper, but if we let our emotions get the better of us, we're almost guaranteed to make bad decisions that we'll regret later.
Totally. It's like dieting. You know, we all know that we should eat healthy and exercise, but how often do we actually stick to it? There's always that temptation to go for the quick fix, the fad diet, the promise of instant results. It's the same thing with investing. We get lured in by get-rich-quick schemes, or we panic and sell everything when the market dips.
Right. So how do we avoid those emotional pitfalls?
Yeah.
How do we stay disciplined and stick to our plan even when things get tough?
Well, I think a big part of it comes down to having a portfolio that you genuinely believe in, one that aligns with your risk tolerance and your overall financial philosophy. If you're constantly second-guessing your investments or feeling anxious about them, it's going to be that much harder to stay the course when things inevitably get bumpy.
Yeah, you need to have that confidence.
Exactly.
So it's almost like you need to have an emotional connection to your portfolio, not just blindly follow someone else's advice, but really understand why you're invested in what you're invested in.
Yeah, you've got to own it. It's about taking ownership of your financial future, really. Toby talks about how his own portfolio has evolved over time. And it's not necessarily what you would see in a textbook. Remember, he has that mix of index funds, individual stocks, private equity, and even a little bit of Bitcoin.
Yeah, that Bitcoin allocation really surprised me. It seems a bit out of character for someone who's such a strong advocate for index funds. Do you think it's a good idea for the average investor to dabble in something like Bitcoin?
Well, it's definitely a high-risk, high-reward kind of play. I think for most people, it's probably best to keep crypto as a very small portion of their portfolio, if they choose to include it at all. But, for someone like Toby, who clearly understands the risks involved, it might make sense to have a small allocation just as a way to potentially capitalize. on the volatility of that market.
Okay, so it sounds like he's found a balance that works for him, where he can participate in the excitement of like individual stock picking while still maintaining that solid diversified base with index funds. But I guess the key takeaway here is that there's really no right or wrong answer when it comes to the exact composition of your portfolio.
Exactly. What matters most is that your portfolio aligns with your goals, your risk tolerance, and even your interests, right? If you're passionate about a particular sector or company and you've done your research, there's nothing wrong with allocating a small portion of your portfolio to that, as long as you're, doing so responsibly.
Right, so it's about finding that sweet spot where you're excited about your investments, but you're not letting that excitement cloud your judgment or lead to reckless decisions. Okay, let's recap for a second. We've talked about diversification, the power of index funds, and the role of bonds in a portfolio. But we've also delved into the psychological side of investing and recognized that it's not just about numbers and spreadsheets. It's about finding an approach that feels right for you, both intellectually and emotionally.
Right, and that brings us back to that question we posed earlier. What one change could you make to your portfolio today to make it better suited? Your needs and preferences. Maybe it's adding some more diversification. Maybe it's shifting your asset allocation around a little bit. Or maybe it's just taking some time to really educate yourself about the different investment options that are out there. Whatever it is, remember that your portfolio is a living, breathing thing. It should evolve as you do.
Ooh, I love that analogy. A living, breathing portfolio. That perfectly captures the idea that investing is a journey, not a destination. And just like with any journey, there are bound to be bumps along the road.
Exactly, for sure. There will be detours, unexpected obstacles, maybe even the occasional wrong turn. But by staying focused on your goals, diversifying your investments, and learning to manage those emotions, you'll be well equipped to navigate those challenges and ultimately reach your financial destination.
This has been such a thought-provoking conversation. We've covered so much ground, and yet it feels like we've only just scratched the surface. But before we jump into the third part of our deep dive, I think it's really important to acknowledge that investing can be incredibly complex.
Oh, absolutely.
Right.
And while we've tried to provide a comprehensive overview of how to build an investment portfolio, it's absolutely crucial to remember that this is not financial advice. Everyone's situation is unique, and it's always, always best to consult with a qualified financial advisor before making any investment decisions.
I completely agree. So with that important disclaimer out of the way, let's shift gears and explore the very practical side of building a portfolio. How do we actually go from thinking about investing to actually taking action? We'll tackle that question and more in a final part of our deep dive. Stay with us. All right, welcome back. We've talked strategy, we've talked psychology, but now let's get down to like the actual nuts and bolts. How do we actually take action and start building this amazing investment portfolio?
Yeah, I mean, this is where the rubber meets the road, right? It's one thing to, grasp all the concepts, but putting them into practice can feel like a whole other beast, especially if you're new to all this.
Yeah, it can totally feel like you're standing at the foot of a mountain.
Mhm.
Where do we even begin? Did Toby offer any guidance on this in his video?
Yeah, he did actually, and it's surprisingly simple advice. He really emphasizes starting small and just staying consistent. It's way more effective to invest a little bit regularly than to try and time the market or make these big, sporadic investments.
It's the tortoise and the hare all over again. Slow and steady wins the race.
Yeah.
But okay, once you've decided to start, how do you actually choose where to invest? There are so many options out there.
Well, Toby's a big proponent of index funds, as we've discussed. They offer a really straightforward, low-cost way to get exposure to a broad range of companies and markets. He mentions specific indexes like the S&P 500 for U.S. stocks and the FTSE 100